state-owned enterprises, organized by the Sri Lanka Institute of Directors together with AICPA and SIMA Sri Lanka. To commence proceedings, it is my honor to invite Mr. Arjuna Herath, former chairman of the Data Protection Authority of Sri Lanka and former senior partner at Ernst & Young, and the committee chair of the Public Sector Forum of SLID, to deliver the welcome address. Sir, over to you.
A very good evening, ladies and gentlemen, and a very warm welcome to each one of you to this very important forum on strengthening oversight, advancing governance in Sri Lanka's state-owned enterprises. Given that we have lost a little bit of time, I want to be extremely short, giving an opportunity for the resource personnel we have today to speak at length, as well as for the Q&A that we will run subsequently. Just to give you a very short brief on Sri Lanka Institute of Directors. Sri Lanka Institute of Directors is the National Institute of Directors, serving directors of the private sector and the public sector. We have been running generally forums, leadership programs for both public sector and private sector. And today's forum is dedicated to the public sector, given the context and the environment that we are faced in the very recent past, and for the demand that's been forced on us to strengthen governance across the private sector as well as the public sector. And we thought it may be, given the complexities and the nuances and the nature of difference we have in the public sector, we thought it was appropriate to have a dedicated forum for public sector directors on audit, on the audit committee and oversight that would be possibly required to face the evolving current scenarios and the complexities. So beyond that, I don't want to give introductions to the subject. We will have the moderator and the resource personnel talking about it. But I just want to thank, first of all, the resource personnel who volunteered to be part of this forum today to enlighten our audience on the requirements of the public sector on governance and audit requirements. And also, I wish to thank the AICPA and CIMA for partnering SLID in this event. And most importantly, to all of you who are participating today, who, you all will be the catalyst on the progressive journey that we need to follow to create a robust environment on corporate governance and on audit committee oversights. Thank you.
Thank you, sir, for those insightful opening remarks. Let me now introduce our first speaker, Mr. V. Kanagasapapathy. Mr. Kanagasapapathy is the retired Director General of Public Enterprise in the Treasury, bringing over 4 decades of experience in public sector financial management and reform. He has also served as a member of the board of the Bank of Ceylon, People's Bank, Merchant Bank of Sri Lanka, and State Mortgage and Investment Bank. A Harvard MPA graduate and fellow of multiple professional bodies, he has played a pivotal role in strengthening public finance systems and institutional governance. Sir, we now invite you to deliver your presentation.
Thank you, Madam, for the introduction, generous introduction. First of all, I wish to thank the organizers for inviting me to be a panelist in this forum. And very good evening to all of you. And the theme of this webinar is strengthening oversight in advancing governance in SOEs. Now, the framework for governance is governed by the guidelines on corporate governance issued by the Ministry of Finance. Now, the Ministry of Finance is authorized by the PFM Act to issue guidelines on corporate governance. And these corporate governance guidelines when they issue the guideline, they have identified that the failures of SOEs had been mostly due to the failures in governance. Now, the corporate governance is basically a system by which the enterprises are directed, controlled, and managed. It is basically the responsibility of the board of directors to see that the governance is in proper place. And only thing is, although the governance guidelines was very comprehensively addresses the pertinent issues like the professional boards, strategic direction through corporate plan, action plan, budgets, KPIs, internal controls, and audit. And although the roles to be played by the chairman, the board of directors, the secretary, senior management staff, audit committee, risk committee, and also it provides the audit committee charter and so on. It's very, very comprehensively addressing all these aspects in the guidelines. But unfortunately, the implementation has been very weak, mainly because of the absence of effective oversight. Now, the guidelines have even 5 annexures giving in details about, how to prepare and present strategic plan, action plan, budgets, and also the directors' declarations, audit committee charter, and annual reports and accounts, and the list of SOEs where the risk committees are required. All these aspects have been adequately covered. But unfortunately, the oversight of governance has not been taking place effectively. Now, when you speak of oversight, it takes place in 4 levels. Initially, the board level, that is the audit committee functions. The audit committee handle the board oversight function. On behalf of the board, they handle this audit committee, the oversight function, and which is very, very important. In addition, the ministry level, the respective ministries will have to handle that. And also treasury level, the public enterprises department on behalf of the Minister of Finance, Secretary to the Treasury and the Minister of Finance. Finally, at the parliament level, the oversight committee, that is the Committee on Public Enterprises, is expected to handle this oversight function. I would say all these levels, there is a lot of improvements required in order to ensure that we advance this governance in the public sector or in the SOEs. The PFM Act number 44 of 2024 authorizes the roles to be played by the Ministry of Finance, the line ministry, and the Secretary to the Treasury in the oversight. Now, with regard to the parliamentary oversight, the standing orders of the parliament deals with the expectations of oversight. If you look at my presentation, actually, my presentation has been limited to oversight through the audit committees only. The main reason being, our theme of the conference very specifically says that to explore how the audit committee's oversight can strengthen in order to advance the governance. So I have, and all the time limitations, I prepared this presentation for 10 minutes, confining myself only to audit committee oversight. So I will just quickly run through the presentation, and we can discuss this at the question and answers level in detail if there are any issues. Basically, what I have listed here is the requirements of this audit committee in handling the oversight function. So quickly we can run through this. As you all know, the state-owned enterprises are owned by the public, and the government which runs the enterprises is accountable to the people because people's money is used, therefore the accountability is to the people. And Parliament, which represents the people, issues directions to the government through various legislation, particularly the constitution, as well as various legislative enactments. The government, in terms of the enabling legislations, appoint the board of directors to manage the affairs of the enterprise. So the government doesn't get involved directly in the managing of enterprises. They appoint a competent board of directors to run the affairs of the enterprises. The Treasury, on behalf of the Minister of Finance, issues rules, regulations, and guidelines to regulate the governance in SOEs and appoints its representative to the board of SOE. Every board, I think the Treasury also has its own representatives in addition to the board of directors in order to look after their interest, basically whether the Treasury rules, regulations, etc. are complied with properly. The board of directors' responsibility is to appoint the audit committee to handle oversight function on its behalf. To oversight function is handled on behalf of the board in terms of the guidelines issued by the Treasury, because the guidelines very clearly says how the audit committee should be appointed, and the composition, the terms of reference, etc. is very clearly mentioned in the corporate governance guidelines. So they go by that and do that. The audit committee is a vital component of corporate governance, serves as a cornerstone for effective governance. So the audit committee plays a very, very important role in ensuring effective governance in the boards of SOEs. The detailed duties and responsibilities of the audit committees are set out in the guidelines on corporate governance for SOEs issued through the Public Enterprise Circular number PED1 of 2021. So I would suggest that for detailed aspects of the entire governance, this circular should be looked at. So I am giving this reference so that you can look at the entire aspects of governance requirements expected by the Ministry of Finance. As you all know, the audit committee is a specialized subcommittee of the board. It doesn't have its own authority. It has to get the authority from the board. So it's a subcommittee of the board playing an important role in the board oversight function. The audit committee should consist of at least 3 independent non-executive directors. Chairman of the committee shall possess financial management skills. So these are requirements, but in reality, if you see, none of the directors in the audit committees are independent. They may be non-executive because there are no executive directors in the public sector, corporate in SOEs, but you can't consider them as independent because they all are appointed by the government. Now, preferably, and also the chairman of this board, this committee should be possessing financial management skills. Preferably, he should be a professionally qualified accountant to have the effective functioning of the audit committee. That also invariably doesn't happen. Preferably, it should be a multidisciplinary team because various aspects have to come in. This is not merely the finance aspect, the various other aspects also. Therefore, it would be better if we can have a multidisciplinary team. And CEO, CFO, and other senior management staff will attend the meeting on invitation. And the representative of the Auditor General will always serve as an observer. While the internal auditor will be the convener providing the agenda and briefing materials, the board secretary will maintain the minutes of the meetings. The terms of reference to the committee should be in the form of comprehensive written mandate, basically in the form of an audit charter. This also very seldom you find in the SOEs, you have a comprehensive audit committee charter, because this is the mandate that is coming from the board, giving the terms of reference to the committee. The audit committee charter should clearly define the scope, authority, roles, and responsibilities of audit committee. These are very clearly specified, and a specimen charter is also available in the guidelines. The audit committee charter should clearly, should be there in every enterprises, giving the authority to handle the oversight effectively by the audit committee. The audit committee should, at minimum, assist the board oversight of financial reporting as to their compliance with Sri Lanka accounting standards, statutory and other regulatory requirements, internal controls, and risk management practices. The annual report should contain a report of the audit committee highlighting its composition, functions, and performance. So what they have done during the year in handling this oversight has to be summarized in the form of a report, and that should be reflected in the annual reports and accounts. The review of financial reporting to ensure completeness, consistency, compliance to statutes, rules, regulations, policies, and accounting standards. These are the roles to be played by the audit committee. Study and recommend that the contents of the interim reports and the annual reports are accurate and transparent. Supervision of internal audit function. Basically, the internal audit function comes under the purview of the audit committee, and they have to approve the audit plan and evaluate the performance also, whether the audit has been carried out in terms of the audit plan. And they also discuss, the audit committee also discussed with the management and auditors the program and the results of audit to assess the outcome. Also evaluate the internal control system, particularly the cyber security and control of information technology to achieve effectiveness. In the absence of a risk committee, review the risk reporting and managing the key areas, ensuring the existence of proper risk management framework. Discuss the audit findings, recommendations, and management responses for corrective measures. So these are also very seldom happening. And meeting with external auditors also should happen to determine the scope of scope-related matters. Now, these are all specified in detail, but I have summarized and given here in the corporate governance document. Then the committee consisting of at least, after each meeting, the audit committee's minutes together with the highlights should be summarized and submitted to the board for adoption and necessary action. Now, what is required is what has been deliberated and what their findings are, and their recommendation has to be summarized, and with the highlight, the minutes should be submitted to the board. This also very seldom happens in the public sector SOEs. In order to strengthen the transparency, accountability, governance, the clarity in the preparation of annual reports and accounts, the audit committee has been mandated now to look at the circular number PED 1/2021 dated 30th December 2025. It's the latest circular issued relating to the audit committee role in relation to annual reports. Now, the annual report is basically document that has to be, that has to reflect the transparency, accountability of the enterprise's management. Now, so the circular requires to study the contents of this circular, where the structure of annual report has been given relating to various types of organization, but the audit committee has to study them and see what things are relevant to their own organization, and particularly the emphasis have been given for legal mandate of the entity and alignment with statutory objectives, entity's operational nature and stakeholder expectations, applicable non-financial reporting framework, disclosure of progress of strategic and policy objectives, compliance with audit requirements, and transparency in governance, risk management, and internal controls. Now, these are additional requirements given to the audit committee by the latest circular in order to ensure that the annual reports contains what is relevant to reflect the transparency and accountability of the organization. The audit committee should therefore study the circular and makes its recommendation to the board for approval and to comply in preparing the annual report and accounts. So basically, this is what I wanted to mention. In conclusion, the audit committee plays a pivotal role in board oversight function. Effective role of audit committee will ensure accuracy and transparency in financial reporting and enhance financial integrity, risk management, and compliance, regulatory compliance. It is important to note that the recent cyber fraud cases in the public sector is alarming and demand the need for enhancing the oversight of ethical aspects and also the anti-corruption programs. It also emphasizes the importance of strengthening governance, internal controls, transparency, accountability, digital oversight, and fraud risk management in the public sector. The audit committee charter should be updated continuously, taking into account of the current environment or the current requirements. Members of the audit committee should also update their knowledge on the situation and the regulatory changes. Generally, the oversight function in SOEs is very weak, and the webinars of this nature is very timely, and I am sure will open the eyes of SOEs. So currently, I think these type of webinars and capacity development programs and director trainings and things like that are very relevant. So this is a good timely action taken by the Institute of Directors. So we are very much thankful for this exercise. Thank you for the time given to me. Thank you.
Thank you, Mr. Kanaga Sapapathy. It is now my privilege to introduce our first keynote speaker, Mr. S. Swarnajothi. Mr. Swarnajothi is the former Auditor General of Sri Lanka, having served as the 38th Auditor General with extensive expertise in public sector auditing, financial governance, and accountability. He currently serves on the Board of Directors of Commercial Bank and is the former chairman of its audit committee, contributing significantly to strengthening financial oversight practices. With decades of distinguished public service, he has played a pivotal role in enhancing transparency and governance standards across state institutions. He continues to be a respected voice in public financial management and institutional accountability. Over to you, sir.
Thank you, Sneha, for your nice introduction. First of all, I will make some correction. You said that I am still at the moment, I am not in the commercial bank board, right? I was the I was there as the former audit committee chair. Now I am not no more there, right? Okay. Good evening, everybody. First of all, I must thank the organizing committee for inviting me to discuss on a topic that has an immense value on the governance of SOEs. All of you are aware that SOEs in our country plays a significant role in our economy. They utilize the utilities such as electricity, water, communication, etc., which affects the day-to-day life of the public. and provide a large number of employment to our population. However, some of the SOEs are making huge losses and become a burden to the economy. So therefore, it is very important to discuss about how we can improve the governance of these institutions by strengthening oversight function. Let us look at what do we mean by oversight. Oversight typically involves a mix of monitoring, planning, and corrective actions, often known as oversight. That means leading from above. If we look at the purpose of oversight, we can see that it will ensure accountability by holding management answerable for actions and results, enhance transparency by making organizational activities visible to stakeholders, prevent misconduct by detecting and correcting potential wrongdoing, and promote improvement by providing guidance to enhance organizational efficiency and performance. Now, oversight aspect of SOEs can be described under two main categories. That is external oversight. It is exercised from the outside, from the entity by external parties, such as at the planning stage by the Ministry of in charge of that relevant subject and by the Ministry of Finance, or at the post-implementation stage by the Auditor General and the Committee on Public Enterprises. Now, the responsibility of internal oversight is lies with the board of directors. Now, for this matter, they don't normally divide the main functions to the several subcommittees, and then each and every subcommittee is asked to planning, implementation, and supervision of those subjects, right? When it comes to overall oversight, the functions of the organization, it is entrusted to the audit committee, right? Now, in this regard, the role of the audit committee is to oversee the financial reporting systems and thereby ensuring the integrity of financial statements, monitor compliance with SOE policies in relation to financial reporting, legal and regulatory requirements, review and strengthen the systems and procedures of the internal controls, performance of internal audit functions, and liaise with the Auditor General and with the view to safeguard the interests of the public. Now, out of these functions, I would like to confine my speech to the main three areas, because other speakers will cover the other areas, right? So, the three areas are internal control and regulatory compliance, internal audit and inspection function, and the liaise with the AG. So, let us look at the first subject, that is internal control. The audit committee should ensure that the internal controls are robust enough to protect the organization's assets and ensure the reliability of the financial reporting. In this context, audit committee could review Auditor General's report and the management's report on the assessment of the effectiveness of the internal controls. The audit committee should review the internal controls to satisfy their design, implementation, and effectiveness. Now, in this regard, the audit committee could assess the overall adequacy and efficiency of the organization's internal control and risk management and ensure that their effectiveness. Then again, they can scrutinize the controls specifically designed to prevent material misstatement in financial reports. Then again, they can assess the risk that management could bypass established controls to manipulate financial results. Then again, they can review the effectiveness of the anti-fraud programs, ethics policies, and whistleblower mechanism, and ensure the internal control framework meets legal and regulatory requirements. I would like to elaborate on that aspect. Now, especially, you know that there are certain regulatory compliance such as EPF, ITF, and tax law and all that, and there may be some other rules and regulations that are applicable to the particular organization. So then we have come across so many problems with regard to these the EPF, ETF payments and taxes, because the thing is there are, in certain cases, there are no proper monitoring mechanism to see that those are complied with. Now, I know that with my experience, there are so many accumulated losses, accumulated unpaid balances with regard to the tax and then EPF. So sometimes it may be accumulated and they will have a very huge burden on the financial position of the organization. Now, again, in this case, we had the audit audit committee can review the findings of any examination by regulatory. For example, now if you it is a bank and other financial institutions, the central bank will have their quarterly reports, reviews, and their reports. So then audit committee can review those reports and then see what are the weaknesses mentioned by them in their reports, right? In the meantime, they can see that even the Auditor General's report, especially I know that there is a special regarding the non-compliance with rules and regulations. Then the audit committee can go through them and then see what are the weaknesses shown by the Auditor General's report and what action has been taken by the organization to correct it. Then there may be certain other established code of conduct or any other policy, ethic policy in the organization. But with my experience, what I can say is that there may be certain code of conduct, but if it is not properly communicated to the people, it will not be effective, right? So then that's why the audit committee should review and see whether those are whether it is ineffective. Although sometimes maybe in the books and it may not be on the grounds, right? So then just a minute. Excuse me. තියනද? නැති. බැටරි නේ charger එක නැද්ද? නැහැ.
Please give us a few minutes.
Has a small problem with the electricity. Okay, thank you. Right. So then, yes, I was discussing about the policies of ethic policies and other policies in the organization. So then, we can, when we are reviewing the controls, then we can see that whether there are any updates of those compliance matters, and then we can, for that matter, we can get the assistance from the compliance officer or some other, say, legal officer, then to update the present situation. Now, there is another important factor, that is the internal audit and inspection function. So when we talk about the audit committee inspection and internal audit function, that internal audit function is very important, because the internal audit, once there is a strong internal audit only, that audit committee will able to fulfill their functions, right? So then it is unfortunately in so many organizations, the internal audit function is not properly done, because there are no qualified or experienced and well-trained officers in these divisions. So it is very important to provide them with proper and continuous training to improve the knowledge and skills and competency. Now, when we assess the internal audit functions, right, audit committee can always approve the internal audit plan of the internal audit division, and not only approve the plan, but they can see the progress by monitoring that and see if there are any loopholes, any obstacles to executing that plan. But they can do is they can always, sometimes they may need to revise the program, right? So then always approving the plan as well as the monitoring that plan is very important. Then they have to ensure that the internal audit division, head of the division, as well as other officers of the internal audit division, they are about their independence, right? I know that in certain cases that internal audit division head and other staff of the internal audit division are not that independent because sometimes they may report to some higher administrative officers in the organization. So in that case, other than the internal audit committee, there should not be anyone who should be able to interfere their function, right? So then, firstly, they have to through their plan, and at the end of the year they have to assess their performance, and then they can recommend to the board if they are on their uh, bonus or any other payments to be made to them, right? If it is then audit committee can always discuss the findings and recommendation and the what are the management response on the internal. So then the audit for every month or sometimes when you are going to have the internal audit committee meeting, it is a must that you have to take the internal audit report and discuss then and there and see the response that have been made by the audit management, right? So then another important thing is that there should not be any budgetary or scope limitation by the any other organization or hierarchy of the organization, right? So then they should be provided with necessary finances, and then other than the audit committee, no one should interfere what they are going to do and how they are going to do it. So then there should not be any interference from other parties other than the audit committee. So then sole authority of deciding what and what should be done and how it should be done should be decided by the audit committee only, right? So then again that the appointment of the audit head of the organization, head of the internal audit also should be made on the recommendation by the audit committee. Then otherwise that if that responsibility is given to someone else, the head of the audit committee, head of the internal audit may be administratively he may be needed to report to the CEO of the organization, but whereas the recommendation how on the appointment should be made by the audit committee. So then so that is all about the internal audit function. Then there is another topic that is about the liaise with the AG. Now, in observing the COP committee discussion, it can be seen that certain instances, the board and the management of SOEs are not in a position to answer the queries raised by the COP chair and the members of that. In some occasion, we have seen that the chief the secretary of the ministry and the chief financial officer is not in, he has to face some embarrassing position because he is not equipped with the necessary information, since he is not provided with or coordinated with the SOEs and the other ministry officials to answer those questions raised by the audit chair, COP chair. So therefore, the audit committee can play an active role in this regard because they can, what I feel is they can work as a bridge between the Auditor General and the board of the organization. So then he can always discuss what are the things that have been taken at the by the Auditor General in his report and what are the problems that have been raised at the COP meeting. Then those things can be discussed at the audit committee meeting, and they always is the audit chair and the audit committee meeting. Since there are members from the representatives from the Auditor General and the representatives from the ministry are participating as the observers, then that can be conveyed. If there are any matters that need to be conveyed to the ministry, also can be conveyed. Sometimes if there is any assistance to be obtained from the ministry, that also can be conveyed to them. Then if you can have that type of proper coordination and communication, I don't see then the embarrassing position faced by the secretary and other officials at the COP meeting could be avoided, right? Then again that I would say that all the correspondence with regard to the internal audit and general audit should be handled by the audit committee, right? Audit committee meeting is a very good forum to discuss the weaknesses and in the internal controls. Again, that I would like to say that not only the representative from the ministry and from the Auditor General, it is a must that senior officers like a CEO, MD, and CFO of the organization should participate in the audit committee meeting as observers. Then not only them, that if the audit committee feel that there is any other relevant divisional head, especially when we are discussing that the audit committee meeting, some relevant weaknesses in some organization, some division. So then the audit committee can call that divisional head to be present at the meeting as an observer. Then and there we can discuss those problems and then take necessary action, or we can ask them to take corrective action. So then we can just then other than that, I would say that I don't know, it is this practice is there in the private sector, but I would like to have it in the public sector too. Then if you can have a discussion other than with the Auditor General's department or the person who is in charge of that audit, that officer with the without other executive office directors in the or any other management officers, then they can have a closer discussion with the Auditor General's representative and see what are the obstacles that they have faced and what are the problems and what are the issues in their audit and what are the weaknesses in the internal control systems and all that. So those things can be discussed with the Auditor General representative, and this will facilitate to have a conducive atmosphere to enhance the oversight function of the organization. So that is what I want to make as my presentation. But I want to conclude that with this last remark, that is now in reviewing the Auditor General's report and the court discussion for past so many years, it is observed that the SOEs in our country are facing a multitude of issues, right? This includes operational issues, procurement problems, and all that. So and so forth, right? So I believe that in an effective audit committee will be able to strengthen the oversight and enhance financial discipline, and ultimately it will be able to enhance the sustainable public value and to safeguard national resources. Thank you very much.
Thank you, Mr. Swarnajothi. Let me now introduce our second keynote speaker, Mr. Manil Jayasinghe. Mr. Manil Jayasinghe is a former partner at Ernst & Young with over 3 decades of experience in audit, advisory, and corporate governance. He has held several prominent leadership roles, including serving as president of the Institute of Chartered Accountants of Sri Lanka and contributing to national-level financial governance. He has served as a director at key institutions, including the Board of Investment of Sri Lanka. He's a fellow member of CA Sri Lanka and CIMA UK. He brings deep expertise in financial strategy, risk management, and board leadership. He continues to actively contribute to strengthening governance frameworks and professional standards in Sri Lanka. Over to you, Mr. Jayasinghe.
Thank you, Kishni, and good evening to everyone. I hope I'm audible and presentation can be seen, right?
Mr. Jayasinghe, you're a little faint.
Hello, can you hear now?
Yes.
Okay. So today my brief presentation, I think I'm not trying to go through some of the things that previous presenters made, but I would like to bring a different perspective to this whole equation. So as you can see, while the Sri Lankan SOE showed accounting recovery in 23-24, the underlying governance weaknesses, board effectiveness, audit follow-up, procurement disciplines, and strategic accountability continue to pose a material, fiscal, and reputational risks. So if you really look at what has happened, the Ministry of Finance continue to monitor 52 key commercial SOEs, which are strategically important. The broader estimates of SOEs are more than 500, but some of them are small. But you can see the extent of the issue, right? So if you look at the performance from 23 reported in 24, in May 24, the State Finance Minister reported that Sri Lanka's major SOEs recorded an estimated 460 billion profit in 2023. a sharp turnaround from the 743 billion loss in 2022. But this recovery was primarily driven by tariff reforms, subsidy removals, and exchange rate stabilization in the energy related entities. So what is important to note is that this improvement reflects policy corrections but not necessarily indicates structural governance reforms. So many governance weaknesses still remain unresolved. Then we look at the historical loss situation affecting 2024. According to Department of Public Enterprise data released in October 24, 20 out of 52 major SOEs incurred combined losses of 851.8 billion during 2018 to 22 period. These losses continue to affect the Treasury's exposure and public finances in 2024. In 2024, the operational performance signals a mid-year fiscal data shows that 52 major SOEs generated approximately 280 billion in profit during the first half of 24. Although performance varied sharply between entities, some entities improved while others continued to show operational stress. Some of the big ones that we showed is like, say, for example, Sri Lankan Airlines still continued to show some losses. Ceylon Electricity Board has now shown profits. However, the profits are not coming from improvement in governance or improvement in the performance per se. It's coming from primarily from policy price changes. They still continue to have heavy exposure to price policy, debt servicing, and governance risk. Performance volatility continues to raise oversight concerns. So, if you look at this, the SOE manage strategic national assets and public funds specifically in key sectors such as energy, transport, finance, ports, and utilities. So, in our economy, large component of our economy is actually managed by the state, which is through SOEs. Governance failures can create fiscal pressures and reduce public trust. Fiscal discipline and public trust depends on strong governance. Audit committees serve as key governance mechanisms by providing board level assurance and independent challenge. So, to illustrate some of the areas that has come out, there are, I think even Mr. Swarnajothi mentioned, procurement overruns and contract management, debt accumulation and liquidity pressures, delayed financial reporting and unresolved audit findings. I will deal with that in a little while as to what happens. Asset utilization and operational efficiency. Although some SOEs improved in 24, historical losses of 851 billion continue to affect the government finance. Debt obligations, contingent liabilities remain significant. This means that boards must monitor liquidity risk, debt servicing capacity, capital expenditure approvals, and the dependency on the treasury. So many SOEs in sectors such as energy, transport, aviation, ports manage high value procurement and infrastructure contracts. In 2024, governance risks still include cost overruns, weak tender evaluations, vendor concentration risk, contract variation without proper approval, process risk due to digitization, and audit committee. So the audit committee helps to ensure that the procurement controls are operating effectively. So typically, if you look at it, the audit committees need to focus, high focus has to be on controls. They have to look at financial reporting. They have to look at compliance of these compliance functions, one, and the compliance in the controls. And obviously, they have to look at and identify risks and how the organization is responding or having mitigation strategies for these risks. So when you look at this, so areas that we need to focus on is the financial statements and management accounts of the budget. A good understanding of the financial reporting process and evaluating the judgments exercised by management in the preparation of financial statements. See, today we have had situations you can see in the news or whatever. There are a lot of areas where things are coming out. Some basic control features are not happening. So, for example, I don't know how many audit committees really understand the process of how transactions are accounted and get to the ultimate financial statements. So if that process, does the process have adequate controls designed in there in order to give you that level of comfort that these transactions and activities are properly getting captured, they are getting recorded, and they are getting transmitted into the final financial statements. Now that part, I'm not necessarily sure how many actually really look into that area. So sometimes we look at internal audit and we say, how have you done your internal audit testing for the year? So they have done some area, not necessarily everything, right? But we take comfort that everything is okay. So see, if you look at some of the things that are happening today, there are basic control weaknesses. The design of the control is not responsive to environment. If you take these people talking about the 2.5 million treasury activity, so from what I can see, if there are some basic things. So when there is a change in the vendor accounts, there has to be a process of validating of that change. Did that happen? Then did the back office actually do the reconciliations? So once the payment has gone, have you called for confirmations and asked them, has that balance reduced? So some basic features doesn't seem to have been functioning. So that again, you have to understand, but today we are living in an environment of increasing digitization, and increasingly things can be done at a very fast pace. So originally, if you had to remit money out, there would have been a big process. Money would have to, you had instruct banks, then those banks had to remit. Those people have to confirm that the remittance has come. All those stuff there. But today, with a click of a button, you can remit the money out, and you don't know where it has gone after that. So then, early identification of operational inefficiencies, monitoring internal controls and risk exposures, design effectiveness of the process and compliance. So this is what I meant. We need to relook at our controls and see whether these controls actually now address the risks that it poses in that process. Now that is the design effectiveness. So I don't know how many actually do this. For example, in the US, this over financial reporting, this problem was there, and that is why the Sarbanes-Oxley SOX came in, and there is SOX evaluation that happens to say that, okay, does the entity have a process which is designed to address the risks that are coming out from that process? Then you can go, internal audit can then go and see, okay, have they complied with the process? But if you have bad design of controls, however compliant you are still not going to address the risks that you are exposed to. On the other side, you can have well-designed controls, but if you are not complying with them, once again you are exposed to the risk of things happening. The next issue is that in the oversight part, we need to ensure that cybersecurity process risk is this is because of digitization. So do the audit committees look to see what cybersecurity action that we are doing? Say internal audit, we check. Sometimes IT audit, we don't check for a while. 2-3 years we go without doing the IT part of these audits. The security, the sort of whether people can hack into your systems, simple things like emails. So this part sometimes is not getting done, and once again audit committees are supposed to ask those questions, are these being done? Now we have an added one in Sri Lanka, which is the PDPA, that is personal data protection, which basically once again does our systems actually are systems designed in our processes in order to ensure personal data protection. The new one that is on the table is bribery and corruption. Again, there are a lot of requirements under the bribery and corruption law, and finally the responsibility comes to the board, the directors. So again, the audit committee has to have an oversight to see whether the entity itself has a process in place to ensure that it complies with the law that has been put out. Then monitoring internal audit and independence and effectiveness. I think Mr. Swarnajothi also mentioned one of the problems that we have with internal audit is, in general terms, internal audit is the chief internal auditor, whoever it is, has to report directly to the audit committee. It can't report to the administration. It has a dotted line to the administration for general, how should I say, day-to-day things like, taking leave or things like administrative tasks, it has a dotted line to the this thing, but they actually should be driven and directed by the audit committee. Next thing is track implementation of external audit recommendations, including the identification of root cause and risk mitigation. Now, I think Ms. Swarnajothi also mentioned that the audit, the external audit or the Auditor General has many observations that they do. Now, these observations I have seen in most cases, you don't really do a deep dive into these observations as to why is it happening. So as he mentioned that say for example bank reconciliations. Now there are a lot bank reconciliations are probably done, but there are a lot of reconciling items. No one looks to see whether these reconciling items are getting cleared or as to why it should not be, why they are there. Sometimes they say the reconciling takes a long time to sort of clear. Then one has to understand that these reconciling items are places where fraud can take place. So audit committees need to have that level of diligence and that inquisitive mind to go into some of these things and ensure that the management is actually performing their tasks to the satisfaction of the audit committee, so that they are ultimately responsible for the integrity of the financials that are coming out. So the financials come out from a process. So therefore, they need to ensure the integrity of those processes as well. If the integrity is not there, the ultimate numbers you are seeing may not be accurate. Next thing is, in addressing some of these issues, another thing that I have found is, let's say a particular issue takes 6 months to correct. During that 6 months, what happens? Your risk is still there because it was not done, right? So therefore, now you have two problems. Because you have escalated or identified this risk, people also know that this gap is there. It takes 6 months to correct means people know that this weakness is there in the system. How do you address this? Again, audit committees need to address these things. Escalate unresolved control weaknesses to the board. So audit findings must lead to action. Audit committees must close the gap by reviewing Auditor General's observation, tracking the unresolved audit findings. This is very key. Timelining them, tracking them, and I would add one additional thing: during that time period, putting alternate procedures to ensure that the risk is being monitored. Holding management accountable for implementation. This is one area that I have found in the public sector doesn't happen. All these people, I think Mr. Kanaga Sabapati, all these people said we have to invite all these people to the audit committee. Yes, we have to invite them. Who takes responsibility for actually correcting some of these things? Who's responsible? And that responsibility I have seen is somewhat weak in the public sector. The reporting of unresolved high-risk matters to the board, and also make sure that without follow-up, audits create reports, not reforms. Okay. Sorry. Yeah. So all this, when I discussed, what we said is enhancing the financial discipline. What do we mean by that? I think Ms. Kanaga Sabapati also mentioned reviewing budgets, performance and variances, challenging management's judgment and assumptions. You just don't accept management's judgments as what they have taken. You need to understand it, and you need to also be agreeable to that, the way it has been sort of implemented, the judgment, right? Ensuring timely and accurate financial reporting and ensuring compliance with financial reporting standards. So these are responsibilities of the audit committee, and ensuring that these actually happens and giving oversight to ensure that these actually happens. So next thing is promoting transparency and accountability, supporting internal and external audit independence. Of course, external audit is in most of the SOEs will be the Auditor General. Independence is always there. The next issue would be ensuring that the independence of the internal audit. Tracking implementation of audit recommendations and overseeing whistleblower and ethics mechanism. Now, this is another very powerful tool audit committees have to ensure that they understand when there are whistleblowers who have raised some issues, they need to go into and see, because these can be symptomatic of a bigger problem. By doing all this, we create sustainable public value by protecting the national resources, improving service delivery, and strengthening fiscal sustainability and public confidence. So stakeholder confidence depends on governance. In 2024, institutions such as the IMF and various other people have said strong audit committees help build confidence by demonstrating transparent reporting, independent oversight, ethical governance, and responsible use of public resources. So finally, ladies and gentlemen, an effective audit committee are strategic guardians of public accountability. Strong governance supports long-term national development in the country. So audit committee in 24, the critical priorities is financial reporting integrity, risks and debt oversight, procurement transparency, audit issue resolution, protection of public assets, strengthening of shareholder trust. One of the things that I didn't touch on is sometimes is the composition of audit. All these things require a certain type of a composition of the audit committee. Generally, it says the chairman should have financial background. I will go one step further. If you understood what I just said about systems, the controls, the analyzing of these controls, ensuring that these controls are actually functioning to ensure the integrity of the financial information that you're getting, requires a little bit more knowledge on the control side and the design side. So for that, I would say sometimes it is necessary for you to have a person not only competent in financial activities, but who's competent in these areas. The other members of the audit committee, though it doesn't specifically say in most of the guidelines, I would also think should have some knowledge of some financial knowledge and systems knowledge, because otherwise there is no way that you can oversee what the organization is doing if that knowledge is not there. So finally, I leave this thought with everyone. The question is no longer whether SOEs can return to profitability. It's about the real question whether governance systems are strong enough to sustain it. So with that, ladies and gentlemen, I shall stop and maybe we'll take up the questions as we go along. Thank you very much.
Thank you, Mr. Jayasinghe. We now move on to the panel discussion segment. Let me briefly introduce our distinguished panelists and moderator. Mr. Ashen Jayasekara, Deputy Managing Partner of Video Sri Lanka and Managing Director of Video Partners, specializing in governance, risk advisory, cybersecurity, and forensics, with over 20 years of experience and multiple global certifications. Ms. Vindhya Veerasekara, Partner SW Legal, has over 28 years of experience as a legal expert and was the former Director, Legal and Corporate Affairs at Colombo Port City Economic Commission, specializing in regulatory, corporate and international trade law. Ms. Kamaya Pereira, Partner at KPMG Sri Lanka and Deputy Head of Advisory with over 23 years of experience leading management consulting, technology and national development initiatives across sectors. I would also like to invite again Mr. Kanaga Sabapathy, who I've introduced earlier, Mr. Swarnajothi, Mr. Manil Jayasinghe, and now finally our moderator, Mr. Sujiva Rajapaksa, who is the Managing Partner of BDO Sri Lanka with nearly 4 decades of experience in audit, finance, and corporate governance. He has held several high-level leadership roles, including Chairman of People's Bank and People's Leasing and Finance PLC, and served on multiple corporate boards. He brings extensive expertise in financial governance, regulatory frameworks, and both public and private sector leadership. Let me hand it over to the moderator.
Thank you very much, Krishnika, for the kind introduction. Let me welcome each one of you. I think we have got three fantastic presenters and also panelists. And let me also at the outset thank the SLID for bringing this very, very important and timely topic about the governance. Especially we are talking about SOEs midst of many challenges, what's happening in the market and what we can see. Let's, I think, in the interest of the time, so let's be very specific in whatever the answer that we are going to give. Someone has, please make sure that I think we had some house rules. So, make sure that if you don't speak, just switch off your mic. Then I think that will be very useful. Right. So now there were 3 presenters and very good, excellent. I'm sure participants would have got the best out of those 3 presenters who have been having enormous experience especially in this area. Let me first ask Mr. Kanaga Sabapathy. My God, he has been having 40 odd years experience in handling so many things, and also he has been lecturing us also, Mr. Kanaga Sabapathy. You are talking about, it's very interesting thing. You said that, especially in your, including your conclusion, you said that oversight function is very weak. We understand that oversight functions are very weak. Sometimes, as even Mr. Swarnajothi and even Manil both are talking about follow up and things like that. Can you give us some specific areas, for the best, the benefit of the participants? What are the areas that you think that the functions, oversight functions are very weak, and how to overcome those? Switch on you are muted. You are muted.
Right.
Right.
Yeah. In my presentation, I have not been able to go into detailed explanations of my presentation because of the time factor. Basically, what I have presented is the requirements of governance and oversight by audit committees in terms of the guidelines. So basically, what I refer to as weaknesses is basically the requirements of governance have not been complied with. Although the guideline was very comprehensive with all aspects covered in detail, the compliance part is not at all effective, and it is mainly due to the lack of or the absence of proper oversight functions. As far as the failures are concerned, I think Manil has explained with examples and all that, but he touched on the practical situations and how these audit committee failures have resulted in the impact of lack of oversight and lack of governance, how it has happened and all that. But in my observation is basically if the requirements of governance have been complied with, then I think there will be no weaknesses. I think all these aspects will be covered. That is my contention. Now, if you look at, in the first instance, if you look at the composition of the committee itself, we don't have competent people. If you look at, it's a general statement, there are a few places you find professionals and all that, but in general, you don't find competent people in the board as well as in the audit committees. And their chairmans of these committees are also not possessing financial management skills. In number of places, I find that treasury representatives are expected to share these committees. But the treasury representatives, except a few who have professional qualifications and financial management skills, many of them have no idea about these financial reporting, accounting standards, and audit internal controls, and all these things. This is one of the main aspects, particularly the tone at the top. The committee chair should be strong enough to ensure that the committee functions effectively, and basically the terms of reference of the committee is fully covered. So my first contention is the composition of the committee, particularly the committee chair. This has to be rectified. So basically, if you look at this, the professionalism is the main thing with regard to the board should be a professional board. The governance guideline very clearly specifies all this. But when you come to implementation, these are not happening. So this is, of course, overnight you can't change all this. Gradually, this has to be done. So this is one of the main observation I noticed, that weaknesses in this committee. And the other matter is the oversight I mentioned. There are 4 levels of oversight: the ministry level, the treasury level, and the board level is very important. That is the audit committee. But the PFM Act very clearly lays down the responsibilities for line ministry role, the finance ministry role and the treasury secretary role with regard to these oversight functions. So these are not effectively happening, mainly because of lack of resources and also the professional capacity in those agencies. So this is the, in addition to this, the internal audit aspect. I think the Auditor General also has mentioned that. The former Auditor General has mentioned about it. The internal audit is also very weak. I think you find there are large number of, I have a lot of experiences in large institutions. You don't find professional qualified auditors. In one instance, I can mention that a management assistant is handling the internal audit of a large organization because the management services has not approved or the position is vacant, so they have to manage with all the existing people, and the management assistant at a very low level is handling the entire audit. How can you expect the audit findings and also the deliberations at the audit committee with regard to audit reports? So this is another big issue I noticed to say that these oversight function is very weak, partly because of this.
Thank you very
also-
much. I think I'm sorry I may have to disturb you because of the interest of the time, because now there are so many the panelists, Mr. Kanagha Sabapathy. So let's I'll come back to you again. I think when I finish with the others. I hope you are okay with that. Okay.
Yeah, okay, no problem.
Thank you very much, Swarnajothi. You are there now. You see, now you are the former Auditor General. I'm sure that Manil said that there are about 500 the SOEs, probably maybe out of which he said that 52 are very critical, very crucial, and I'm sure that you would have gone through each and every audit report and you have signed off each and every audit report when you are the Auditor General. What I want to ask you here is now, as a former Auditor General, now you're talking about procurements and lack of systems and controls and things like that. And how do we? What can you suggest? What is the way forward of these crucial the control that should be established?
Thank you, Sujiva. Now, what I feel is now, as I said earlier, now there are so many problems in procurement and the other major areas. So what we can do is, what I feel is that there is no proper monitoring mechanism, right? So in most cases, if you see, just get the procurement function, you don't have a proper plan in advance, and then you don't get the proper monitoring in the process, right? So now that is the main reason I feel. Now, when you see when you are doing any procurement in some organization, they will have firstly you have to have a plan in advance, right? So then, unless you have a proper plan, then you won't be able to achieve your target. There are so many problems, since they are not. Although there are certain requirements, certain recently that procurement commission has issued certain guidelines to have a planning of this procurement, but still what I feel is it still not happen. So if you have a proper plan and then you are monitoring that, and then only you will be able to see whether the work is going according to the plan, right? Now, as it is a very big issue. Now, when it comes to the say donor funded projects, right? Sometimes it will end up with the cancellation of the donor facility. So we have experienced so many problems. In that case, so what I feel is best thing is to have a proper plan. Then you have to monitor it, and then only you will. If you are monitoring it properly, then you will be able to find the weaknesses then and there, and then you can take the corrective action. So that is the most important thing, is that unless then you will not. It will not be accumulated, right? It will not be accumulated, and it will not happen such a situation that either it will be cancelled or then there may be certain huge losses incurred. Now, sometimes you know that there are certain projects have to be abandoned, and then sometimes they have spent millions and millions rupees, but they have abandoned those things due to not fulfilling not achieving their target. So that is mainly due to, first thing is, as I said earlier, there should be a plan. then most important thing is that you have to have a proper monitoring mechanism. So that is lacking everywhere. Then you know that so for certain things like say I know that there are certain UDA projects, then there are some water projects, then some people they have since the in the midway they have to abandon those projects, right? So then we have lost so millions and millions rupees there to that. So therefore, I think what we have to say is that not only other things, if you don't have a proper monitoring system, it will due to not only due to the financial problems, it may be due to certain I would say some area for the unethical things to happen, right? So then because it will be a very good breeding grounds for so the unethical things, malpractices and other things. So then we are just talking about the final results, saying that there were so many malpractices taken place and there were so many unethical behavior and there are so many tender violation and all that. But the problem lies with you don't have a not proper monitoring system. So that is my question to you. I think it's okay.
Thank you, Sarna. Thank you. Very, very important. That's, I think. Manil, I think you made a fantastic presentation, Manil, like other two. Now, tell us, Manil, what kind of structural or cultural barriers, prevent audit committees from challenging management decisions? Sometimes, we don't know when you chair an audit committee. Can you kindly switch? Yes, Asana, right. But please, how do you make sure that, now at least audit committee chair should be able to challenge even the decisions taken by the executives? Will you be able to elaborate that
So,
little?
as I mentioned, there are two things. One is basically getting these members who come there.
Manil, you're not that audible.
Hello, can you hear now?
Now, okay.
Yeah. So, two things. One is that you have to ensure that the competency of these committee members are there, so that they have that skeptical or questioning mindset. That is one. Second one is they also need to possess some experience in the industry or activity that those SOEs are doing. So if it is, for example, electricity, these guys have to know about to some extent how that process works. Because if you don't know that, it's very difficult to provide the oversight. That's one. So to sometimes to get that knowledge, you probably have to understand the business. You probably have to get technical know-how. When I say technical, doesn't mean engineering know-how, but at least some level of knowledge so that they can understand and contribute to the problem, so that they know how to resolve the problems. Then also they have to have some degree of financial acumen or knowledge on these standards and things like that. So that is why I think what Mr. Kanaga Sabapati also mentioned, to get these kinds of people is going to be very difficult. Now, once you are in the job, to learn, yeah, you can, but that will take a long time. So we have a problem of skill and competence. So we have to get those people who understand that. So simple things we were like, even in internal control, sometimes people come and report saying something is not happening, right? But how many audit committees go in and say what is the root cause of that? Most of the time I have seen is, okay, it's not happening, okay, get it corrected. But you are only correcting those transactions. But what really went into why that happened, no one knows. So in most of these cases, that knowledge has to happen. And the problem we have here is because of the political appointment. And one of the issues Mr. Kanagan Sabapati said, generally the chairman ends up being a treasury rep. Now the main shareholder can't be the chair of an audit committee, fundamentally. Yeah, I know they need to show their authority or whatever it is, but the fundamentally they should not be the chair of an audit committee, because in private companies you say independent director should be the person who should chair. Now if you are the treasury rep, and in most of these cases treasury is the owner for the government, their rep doesn't show that independence in chairing the audit committee. So to my mind, the issue is it's an issue of competence and skill.
I know that's not lacking in this country. I think it's a huge issue. And let me thanks Manil. Can you switch? You are muted now. Right. So now we have got 3 panelists, out of which I think always I have to give the first priority to ladies session. So Vindhya is there. I think Vindhya, you are there.
Yes, Sujiva. Hello.
Okay, Vindhya. I think we knew each other for a long time when you were there in the cricket board. Again, cricket board is another state-owned enterprise. Then Port City and many more. I would like to draw your attention about the legal aspect. Now, from regulatory and legal perspective, do you think that this current frameworks, sufficient to enforce accountability, or reform? Any reforms needed?
Yes, Sujiv. So I think current legal and regulatory framework are considered insufficient to enforce a comprehensive public sector accountability, which means reforms are needed. Now, if I may elaborate, traditional frameworks ensure procedural and financial compliance, but they often don't hold the decision maker accountable for poor policy designs or evidence gap or failure to deliver tangible public outcome. Going further on the same basis, look at the more conventional legislative or regulatory frameworks, such as procurement procedures or standard audits. Now, they only check if the funds have been legally spent. But what they don't do is they don't hold anyone accountable if the policy was inefficient or failed to achieve the goals. Then there is also loopholes in conflict of interest policies that may often allow the public officer to leverage his position without any consequences. And thirdly, I think I agree with the other speakers. Oversight bodies of SOEs need to be strengthened. And finally, on this same subject, the lack of upfront digitized public data hinders the citizens' ability to demand accountability before decisions are finalized. I think that's a very important segment that needs to be implemented, because once the decisions are made, there is actually no point in questioning about it. But it is far better to have those questions asked upfront so that even the SOEs can frame their functions accordingly.
Much Vindhya. Now let me go to Kamaya. I know you are the head of management consulting and technology, and you have, I think, enormous experience, probably in even providing services to state-owned enterprises as well, looking at from technology point of view and technology and advisory standpoint of view. How should SOEs rethink their approach, especially to the cyber risk and digital governance at the board level? It's a broader picture.
So thank you. Yeah, I'm here. Thank you. And thank you for that question as well. So I think all the speakers and panelists spoke about capacity building as well as strengthening the board in terms of skill and capacity. And when it comes to cyber and digitalization, which are topics that constantly are in the news, and of course, things that affect both private sector as well as SOEs. So one thing is to make sure that cyber is elevated to an enterprise level risk by making cyber a standing item in the board agenda. And of course, the reporting element, the Audit and Management Committee, having a clear risk appetite covering areas of disruption, data loss, and third-party exposure becomes critical. And of course, we need to have clarity in the accountability and reporting lines. So if there is an ICT lead or a CIO or CISO, they have to have direct access to the board, to the AMC or the Audit Management Committee, and of course have coverage of both IT and OT areas, which are critical to the organization, especially in the landscape of digitalization. And we also need to have frameworks that are fit for purpose. So there are recognized standards, ISO, COVID, etc. And alongside the PDPA or Sri Lanka's Personal Data Protection Act and its obligations, appropriate guidelines and processes need to be developed. And organized SOEs need to start building resilience and not just prevention. They should have approved and routine testing incidents and response, disaster recovery, BCP or business continuity plans. These things need to be embedded and coordinated with Sri Lanka CERT maybe, and also where relevant with the Auditor General's Department also. And procurement was another area which was discussed. And along these lines, strengthening third party and project governance becomes also key. And wherever we're looking at bringing digital, I suppose embedding cyber by design at the stage gate is also very, very key, especially for e-government or digitalization projects, consistent with, of course, the national procurement policies. That's my take on this.
Thank you very much. Ashen, you are there. Ashen. All right. So I know you handle large amount of, you are the man in charge of risk advisory, and you handle large amount of, the clients. And I would like to draw your attention about, now if you take audit committees, and the ESG is the buzzword. So how can audit committees better integrate ESG and sustainability considerations without diluting their co-financial oversight responsibilities?
Right. Good evening, everyone. Thank you, SLID, for inviting me to serve on this panel. So as you know, if you look at in Sri Lanka, if you look at the ESG sustainability reporting requirements in terms of disclosures, we found that in 2025, the top 100 listed companies were expected to adopt SLFRS S1 and S2. But however, when it comes to the SOE sector, which are mainly the commercial undertakings in the public sector, SOEs which have listed debt are expected to implement or adopt SLFRS S1 and S2 in 2027. And it's a kind of a staggered basis. In 2028, SOEs which have a turnover of over 10 billion are expected to adopt it. And then in 2029, SOEs that have a turnover of about 5 billion are expected to adopt SLFRS. So it's still, if you look at the state of sustainability reporting as of today, it's still in a very embryonic, or I would say early to moderate stage in terms of maturity. So audit committees have a very important role to play. I think they need to focus more on financially material ESG risks. They have prioritized ESG matters, not all ESG matters, but ESG matters that materially affect financial reporting, enterprise risk management, valuations, even liquidity. So, but not forget their traditional mandate, of ensuring that the financial statements maintain very high levels of integrity. So towards that end, I would say the core function of the audit committee is to ensure that ESG disclosures are reliable, that in annual reports you get financial information, sustainability information. These need to be consistent. The way ESG data is reported, internal controls over where it's coming from, the accuracy of it. And also in Sri Lanka, we have from 15th December 2026, the new standard is going to be implemented. That is the Sri Lanka Standard on Sustainability Assurance 5000, which will be implemented, and it will be rolled out so that auditors are requested to perform assurance engagements on sustainability information. This standard will now be mandatory. However, it has not been made mandatory for companies. So companies need not get the assurance now itself, but gradually, I believe hopefully in 2027, there will be some sort of an audit over the sustainability figures. Another area that audit committees may need to focus on is how to embed all these ESG
into the existing governance structures. I mean, if you look at how it is governed now, it's a kind of a hybrid model. You have a sustainability committee which looks at long-term sustainability strategy and how to transition to that. And then you have the audit committee, which looks at the ESG disclosures, controls, reporting integrity, and so on. So aligning ESG reporting with recognized standards such as GRI, SASB, TGFI, and S1 and S2 is very important. This is an area certainly that audit committees need to focus on. And also using a risk-based oversight model. ESG risks are prevalent. They need to be now identified, especially the high impact ESG risks need to be identified. Management has to assess likelihood and financial consequences, and the audit committee has a role to play here to ensure that the management is monitoring these risks. So following recognized standards, using a kind of a risk-based oversight model, embedding ESG into existing governance structures, and the primary focus being on the ESG figures. I think all these are areas that the audit committee needs to focus on.
Ashin, you have experience and exposure. I know that, in SOEs. In the present context, do you think that these SOEs have enough capacities and capabilities of, having this, ESGs and things like that? Do they have the, the required manpower?
No, not really. As Mr. Jayasinghe pointed out, Mr. Kanaga Sabapathy also touched on, I think there is a huge issue with competencies and skills, because it's not just a case of, if you look at adopting sustainability, it's not just a case of making the required disclosures. It's about getting this sustainability thinking into practice and ensuring that whenever you formulate strategies, you consider ESG factors into account. So the level of skill in SOEs is a huge factor, because it's very difficult to move people around in state-owned enterprises. It's not like in the private sector. So there has to be a lot of reskilling and upskilling of existing employees. So a lot of effort has to be made, I would say, on training and equipping people who are already there in how to think in a sustainable way and to embed all these practices in their day-to-day activity. So I think the skills have to be sorted out. Competencies, if you cannot procure them, you have to develop them in-house through training and all that. And also the governance structures have to be put in place to ensure that there is proper oversight. Even to that end, I think a lot of training and awareness is required.
On that. Mr. Kanaka Sabapathy, now in your presentation, you said about whether the directors are independent. I hope you are there. Mr. Kanaka Sabapathy, are you there?
Yeah, why not?
All right, okay, thank you. No, in your presentation, you mentioned that, the directors are not independent because of the fact that they have been appointed by the government or the respective. So if that is the case, what's your proposal for them to be independent? You have anything? I don't know whether I have put you onto the spot.
No, this is a difficult answer, a difficult question to answer. Now the government also should appoint, allow people to come in from outside, rather than, these are all political appointments and made, the affiliated people are appointed, and if you can allow independent directors to the board, then they can serve on these committees. I think that is one of the major issue in the audit committee independence. So we must have directors who comes in. There are private sector has mechanisms to recommend they recommend directors to be appointed and then get the appointments of outside directors, but that is not happening in the public sector. So that is something which you can't overnight change this. So that has to be changed, I think, if at all, if you want to have independence.
I'm muted. Sorry, I will mute. Swarnajothi, are you there? I can't see you.
Right. Okay.
Right. Now I'm trying to talk to you about organization culture.
Yeah.
Okay, because every organization, that culture is absolutely important. That plays a pivotal role. Now, looking at that, how important is organization culture in preventing governance failure? Especially, we are aware that there had been so many instances about the governance failures, and being former auditor general. Have you ever come across situation where that you could not audit or measure those effectively
Yeah, Sujiva.
because of the governance failures?
Yeah, no, Sujiva, in fact, I believe that the if you have a proper ethical culture in an organization, you can prevent most of the things that are happening in most of these malpractices and other things, because the rules and procedures won't do, right. We are dealing with the people, right. When you are dealing with the people, you have to have some sort of uh, proper ethical culture in that organization. Then they will not do any wrong thing, right. Now, what will happen is, although we do have so many procedures and rules and regulations, right? So when it comes to implementation, that the people are they are not caring that, and then the attitude is not that good, right? So then ethical culture in that organization is very much important in that situation, as I said earlier, because now it has to come from the top, right? Now, now in most cases, you may have that, for instance, you may have proper procurement procedures. There are so many internal controls procedures, and there are so and so, right? But only thing is, since we should not forget that we are dealing with the people. That unless you make aware, then they will be they will support you, right? Now, mostly, what I feel is that it has to come from top. So here, now the thing is now the transparency and accountability and the integrity and objectivity should come from the top. Then if the top management set the tone, then the other will follow suit, right? So then that is the main position, because now not only that, what I feel is that now there are so many whistleblower and other ethical procedures in the organization, but they are in the books, but even it is not happening, right? So then you should have some sort of ethical culture built up in that organization. Not only plan, but you have to see whether it is happening really. Now, for that matter, you'll have a awareness program to build up the situation, right? So then, that is the now I know that there are certain organizations you have a ethical policies and the code of conduct and other policies, but it is not happening on the ground, because the people it was not properly make aware the other staff of the organization, right? So if you aware them, and then it is very important to have awareness program, I would say, right? If you have then there should be, what I mean is, there should be some sort of the rewards given to people who are following the proper ethical work, and then if there are any unethical things that you have found, then they should be penalized, right? There should be the penalized as well as the rewarding scheme. So then that is very important, because you know that if you have a proper culture, only you will be able to prevent that collusions. So then if you don't have a proper culture, the people will just care that, right, it is up to the top management or the other managers, why should we worry about, right? So if you have a proper culture there, then everyone will feel that, right, if we are part of that, and we have to play some important role in that organization in committing, then they will be committed to those things, right? So that is what I think that most of the things can be avoided and can be prevented if you have a proper culture in the organization, but it should not be in the books, or it should not be in the shelves, that it should it should be on the ground. So then that has to be done, and then it should be implemented properly. So then I think that if you have a proper ethical culture in the organization, then you will be able to prevent so many malpractices happening. Is it?
Got it, Swarna. Thank you very much. Thank you. Manil, I think in your presentation, you are talking about enhancing the financial discipline, which is absolutely important. I would like to draw your attention, now you have red flags sometimes. So, but sometimes it goes unnoticed. Now, even I have been chairing one of the largest SOEs, for more than close upon 5 years. Now, whenever we see, of course, we being financial professionals, obviously, when you look at the balance sheet, sometimes you can see the healthy, whether it is healthy or whether there are any areas for to draw attention. Looking at this red flag, how can the board ensure that red flags, especially in financial reporting area, unusual transactions, identify early and act, on those?
So,
Manil,
today, sort of, in most of these cases, what happens is the financial red flags, sometimes when you put everything together, you lose the wood for the trees. Sometimes you can't see these red flags, right? So the key thing is, in order to get attention to these red flags, there should be some form of exception reporting. So certain things going beyond a certain percentage variation should automatically get highlighted, so that someone then will be able to focus on that and ask, okay, why is this gone up by more than the norm? Does it make sense? Is that supported by some criteria? So all these things, one is that. So today's context, there is also, I kept telling earlier, because of digitization, continuous monitoring also has to happen, right? You can't, in the past, say for example, like if this example of a bank rec, you did the bank rec once a month, that was okay. Today, with the pace of things, I think you can't wait for 1 month to sit and get the reconciliation, because you start reconciling only at the month end, which means it will take another 1 month for it to come out. So sometimes it has to have some daily follow-up and things like that. Next thing is this behavioral, what I call behavioral analysis. So basically you look to see whether the numbers fit a certain behavioral pattern. And when they don't fit a pattern, then you need to look at that, you need to have that skeptical mindset to go into it and see, does this make sense? Does this deviation make sense? Or does it require some further analysis? So there are a lot of areas today, I think, from a governance point of view also, the way we look at things have to change. The old method of doing things may not necessarily pick up some of these things. Even if it does pick up, it will be too late. So one is timely identification and detection, where we need to do what you call, you need to profile certain transactions or transaction flows, and when those profiles don't meet with the expected profiles, then we need to look into greater depth of what those are, because ultimately, like say if you take a situation where you look at the financial account once a quarter, right? So you can't wait for the quarter for it to figure out, and once a quarter means that financials will come out only about a month or 45 days later. So you are talking of, if the event happened at the beginning of the quarter, you are talking of waiting till 3 months, 4.5 months before you can even look at it. So the systems have to be designed in such a way that these things are getting filtered and getting escalated. That's why I said exception reporting, right? So for you to do this, Vijay, one of the things that you will realize is, even at governance level, you have to have some experience and knowledge to pick this up. If you don't have that, it will become, someone will come and give an explanation, then you will just flow through.
Absolutely.
So I still come back to this whole equation of skills, competence, and of course training has to be given, because as I said, things keep on changing. So today, for example, one place I was there, so they didn't have these IT logs. The system couldn't generate the log, so they said they need another 6 months for you to configure the system to generate this log. So my first question is, now that you know that they don't have the logs, what happens when if something does go wrong? Who will detect this? right? So for that period, you need to put into place something, even a manual control that we put in, to ensure that someone has a close and oversight of these transactions or elements. Otherwise, what's going to happen is, till it gets corrected, now that you have highlighted it, you have also highlighted the fact that there is a weakness in the system. Earlier, no one knew about it. Now people know about it.
Right.
So that in itself poses another risk.
Yeah. Thanks, Mani. Thank you. Vindya, now, as we are, can mute please? Can others mute, please? Thank you. Vindya, now, most of the SOEs, except for maybe some, they have commercial objectives. And also every SOE has a public accountability, whether you like it or not. Yes, you are accountable. Looking at that, how can SOEs balance these commercial objectives with public accountability, especially when governance failures, as we are aware in the recent past, carry national implications? Will you be able to elaborate a little?
Yes, absolutely, Sujeevan. So SOEs must separate their commercial operations from their public service obligations in order to avoid national crises like fiscal crises like what had happened. So how do we do this? In order to do, there needs to be a transparent accounting and strict regulatory framework, and also independent boards. Now, independent boards have been touched on by almost every speaker. So merit-based appointment to boards as well as executive appointments to be merit-based is utmost important, so that you have a properly constituted board, independent and qualified. Then I would think there should be a formal agreement between the state as the owner and the SOEs board, which should specify the targets, the responsibilities, and the operational boundaries. And the government should act as a strategic shareholder, granting the management the freedom to make day-to-day decisions. Now, this happens if you have a robust board with competent people, then they let them do their job and they will be accountable. Finally, I would think comprehensive public reporting regarding financial performance, material risk, and achievement of public policy objective is essential for these SOEs.
Good. That's important. Kamaya, now data analytics. I think now this is again a buzzword. Everyone would like to have various data that could be analyzed, and of course there are specialized. I'm sure that in your role, must be doing quite a lot of data analytics done. So now, can you tell us what kind of role that data analytics and continuous monitoring play in enhancing transparency and reducing the risk of misconduct?
Okay, so everybody's talking about transparency, ethics, and the culture, and we're talking about data analytics, continuous monitoring. But the key is that in a digitalized environment, we should have data which is also digital in order to be able to analyze it. If the data is manual, then it's going to be cumbersome in a digital environment to get your correct MIS out. So while we're talking about all this, our data also has to be digitally available. But if in case this is the case, then probably we need to shift from a more periodic check to a continuous assurance basis, and have continuous controls and monitoring on high-risk processes embedded. This could be focused on procurement, revenue, payroll, inventory, so that exceptions can be surfaced early on and facilitate management and the AMC in their decision making as well, and corrective action. So we need to monitor leading indicators, not just the red flags as traditionally done. Probably track duplicate, rapid fire payments, vendor clustering, assess access anomalies, conflict of interest signals, and exception trends. And have these reported through dashboards to the audit management committee and the board as well. Of course, we all, in a digital world, we need to embed analytics into the workflows that we have. So we need to integrate exception alerts into approval systems so that issues can be investigated and resolved at the source itself with an auditable trail. So you need to enable your audit logs, trails, have the supporting requirements under the National Audit Act and RTI expectations. We need to meet this as well. And in order to protect privacy and data quality, so we need to have, make sure that our analytics are governed with PDPA aligned controls to minimize role-based access, so to make sure that we have role-based access implemented, purpose limitations implemented, and have a strong data stewardship as well. So in a digitalized environment, if we do all these things, build capacity, and start with the existing maybe ERPs, document data, upskill internal audit and finance, and then scale to make sure that advanced analytics, probably with even AI, with a clear model, governance, transparency, and change control, then we can have the right insights to make the right decisions. Hope that answers your question.
Yeah, absolutely. That's very important. Thank you very much. Ashen, you are a forensic expert as well. Ashen, you are there?
Yeah, I'm here.
All right, thank you. Ashen, now do you believe forensic readiness, which is very important, is adequately embedded in our institutions, especially SOEs, or are we still largely, reactive when the issue arises?
I think SOEs are still reactive
Lagging.
rather than proactive in terms of forensic readiness. If you ask what forensic readiness is all about, it's about the proactive capability of an organization to gather, preserve, analyze digital information, right? So that it will one day in the future be admissible in a court of law. So if you want to have forensic readiness in your organizations, it basically means that you have to have proper digital evidence preservation. You have to have proper incident response protocols. You have to have cyber investigation readiness, forensic audit capabilities. So all these have to be put in place. So if you look at the internal audit functions of organizations, are they fully forensic oriented? No. What do you mean by forensic oriented is when they do an audit, do they do the audit in a way to detect fraud, right? Do they have the forensic audit expertise? There again, we come to a question of skills, competencies, and tools. You need forensic audit experts. You need fraud analytics capabilities. You need to have auditors who have proper investigative interviewing skills, e-discovery capabilities. And should there be a cyber fraud, how do you approach that? How do you segregate those systems which have been affected? So it's a long way to go to develop that forensic capability. As Kamaya pointed out, there has to be, for example, central log retention, audit trail monitoring, automated anomaly detections where you use AI capabilities so that the AI tool will recognize a certain default behavior pattern and anything that is different to that. They will pick that up as an anomaly and send an alert. So organization-wide, I suppose that you will have to have proper continuous transaction monitoring, real-time transaction monitoring assisted by AI. So that sort of capabilities plus having access to digital forensic labs, e-discovery capabilities, and trained forensic experts, I think is a must to have a certain extent of forensic readiness in SOEs.
Thank you. I think we spent quite intensively this particular panel discussion, but I have another one question for each one of you, starting with Mr. Kanaga Sabapathy. Now, if you are given the opportunity to implement one immediate change to strengthen governance of SOEs, what would be the one that you would like to implement?
I think the
Only one simple answer. Simple answer. Don't elaborate.
professionalism is the answer. Professionalism
Okay,
is
super.
the answer,
Thank
but
you.
it cannot be brought overnight.
Okay, that's your answer.
At least the awareness program and skill development programs continuously, I think we have to conduct to
Yeah,
build the capacity of the directors.
super. Thank you very much. That's what I need. Swarna? Then can I ask Manil?
Sorry, well, I think as Mr. Kanagasawat said, I think you have to bring in the necessary people with the right skill set. So without that in place, I don't think anything is going to happen.
Absolutely. So that's important. Yeah. Vindya, what do you think looking at from outside point of view?
I agree with both earlier speakers. It's merit-based appointment to the board.
Merit-based appointment to the board. Very important. Kamaya, what do you think?
Okay, so since everybody said bring in the right people, merit-based appointment, I'm going to go on to the process and say mandate a standardized audit and management committee charter across SOEs so that we have the process coupled with the people as well.
Super. Ashen, what do you think?
Performance-based accountability frameworks for senior leadership.
I tend to agree with Ashen. In fact, I want to tell you now I have been at a particular place for whatever number of years, but I don't know whether my performance have been basically measured or evaluated by anybody. Because we prepare budgets, we prepare so many things, end of the year, okay, someone should be able to call me and look here, have you done this? Okay, tell us, have you achieved all these things? It could be qualitative or it could be quantitative. So otherwise, no point of just having very nice booklets about your strategic plan and things like that, unless you invite them for a discussion and presentation and say, look, if you have not done this, so why not you select someone else? But unfortunately, in SOEs, we don't have that because you are basically given for whatever number of years. So you are there and you are happy with that. I think that's how I look at. Anyway, once again, thank you very much for each one of you. I think we had a very fruitful discussion. Thanks once again on behalf of everybody. Thanks SLID and the organizers, including Arjun Herath, our chairman, for having us this evening. And I hope that, participants would have got some idea and some, experience, knowledge about this particular subject. Thank you. Over to you, Krishnika.
Thank you, Mr. Rajapaksa, and thank you to our distinguished panel. As we come to the close of today's session, it is evident that strong governance, effective oversight, and informed leadership are essential to shaping the future of our state-owned enterprises. On behalf of the Sri Lanka Institute of Directors and AICP and CIMA Sri Lanka, I extend our sincere appreciation to our keynote speakers, panelists, moderator, and all participants for being part of this important and timely discussion. Thank you for joining us, and we wish you a very pleasant evening.
Thank you.
Thank you.